Welcome to this week's episode of Wealth Unlimited Get There. I'm your host, Kristen Oakley, and I'm joined by Eric Sussman. He is the founder and CEO of the Institute of Financial Wellness, which is dedicated to providing you with the financial education, resources, and services to help you live your best life. Eric, my friend, it's great to be with you. What's going on in your world this week?
Oh, South Florida's going on. It's great to be here. Been boating, having some fun.
Nice.
Life is good.
Yeah, you're looking a little tan there. I like it. Nice. Oh gosh. Well, I know that you always put a lot of thought into these shows. Your heartbeat and what you do at the Institute of Financial Wellness is really wanting to provide all of our viewers with solid financial education that you can implement to make sure that you can live your best life. The reality is that today's modern retiree is facing a host of challenges that previous generations never had to deal with before. We are living longer than we ever have before, and with that comes a whole new set of challenges that we need to navigate. So we're going to unpack that today. So Eric, let's start with that. When you think about today's modern retiree, what is at the top of the list of, gosh, these are challenges that we have to plan for and navigate?
Well, longevity risk is like a new risk. Not that new, but it's becoming more and more of a risk. And what exactly is longevity risk? It's the risk that you outlive your money, right? You don't want to outlive your money. So what we're seeing is, because of modern medicine, people are living longer than they ever lived before, and it's a very big concern for a lot of people.
Right.
As a matter of fact, 70%, according to a study by Transamerica, 70% of people in retirement are worried. They're very, very worried. And we've got to make sure that we address that. And this reminds me of a really funny clip that I saw. This was George Burns.
Okay.
And George Burns was talking about, living longer and this and that. And he said, 65, retirement. When I was 65, I had pimples. So I just thought that was so funny. And it's just so true that people are 65 now. It's a whole new world. They're living longer. They're retiring later. They're spending much more time in retirement.
Right.
I have some interesting stats for you. A married couple, okay? If you're a married couple and you're age 65 and both of you are alive, there's a 50% chance, that one of you will be alive at 95 years old.
Yeah, it's amazing, isn't it?
Yeah, so you can't plan your retirement based on averages. You've got to plan your retirement as, hey, what if I'm the one of the 50% that lives to 95?
Absolutely.
And like George Burns says, well, people are living longer. They're spending more time in retirement. And again, it's a blessing and a curse. Modern medicine is giving people the ability to live a lot longer, live a lot better. But you've got to have money to last. Otherwise, you're not going to live better.
Absolutely. It's interesting when you break it down by the numbers. Most people historically, we had womb to tomb employment, right? You would work somewhere 30, 40 years, retire maybe around 62, the gold watch, the pension, but you might only live to 65. There wasn't that time span to be preparing for. And now, if you think about it, we could easily have an entire another length of time equal to our working careers in retirement if we are living up to 95, 100, that's 30 to 40 more years.
Yeah. And unfortunately, or fortunately, unfortunately, depends on which side of the table you're on, is that it's become a much bigger burden placed on the regular person, the employee, not the employer. And why is that? Well, in the 1980s, if you recall, when they had the gold watch, it also came with that pension that you mentioned. And what exactly is a pension? A pension is an amount of money, a percentage of your salary that you get for the rest of your life. Now, if you got that pension for the rest of your life, I mean, the worry of running out of money,
it didn't exist. No.
You weren't worried. It was like a great situation. The problem now is that in 1980, 60% of people had those kinds of pensions. But you know what it is in 2020? 4%.
Only 4%. Imagine that, from 60 down to 4%.
Yeah.
It's a huge difference.
It's a huge difference, and that's 96% of us must rely on ourselves to produce enough income to make sure that you never run out of money. And if you're stressing about it, on a side note, I'll tell you that one of our existing clients, they came in and they were so worried about running out of money in retirement. They actually used the word petrified. Why were they petrified? Wait until you hear this story.
Okay.
Because their 80-year-old mother, not only did she run out of money in retirement at age 80, but the only job she could get was that it was paid enough and all that was waiting tables.
Oh,
so
gosh,
can you imagine?
Wow.
80 years old, having to go back, and probably so many of you out there have stories that are similar to that. People that have to go back to work. And like you always say, Kristen, it's no big deal if you're working because you want to work.
Right.
But when you work because you have to work and you're doing something that you don't want to do and you're older, it could be problematic.
Absolutely. Well, and you mentioned this fear of running out of money. You know, in all my years of traveling as a financial educator across the country, I think the biggest question, or the most common question that folks have always asked is, am I going to be okay? And what that really translates to is, am I at risk of outliving my money? That's the big fear that I think keeps a lot of people up at night. It robs you of your peace of mind, and we want to do what we can to help remove that burden and give you that gift of peace of mind. So, Eric, we gotta tune this up a little bit, right? We don't mean to be Debbie Downers here, but
right.
We're about solutions and resources to help folks so that they don't run into this risk of outliving their money. So, what do we do about it?
Well, there's a lot of different things that you can do, but I think one of them is create your very own pension, right? There are actually ways out there that you can create a private pension for yourself. Now, a lot of people, if I describe it, first I'm going to play a joke, a game.
All right.
I'm going to describe to you what this personal pension, and then I'm going to say what the name of the product is.
Okay, I love it. Let's do it.
So first thing is, it'll ensure you give a financial company a sum of money.
Okay.
And they will do a calculation based on your age. And they will say, you know what, based on your age, we're going to give you this much money, a pension, every single month. And don't worry, for the rest of your life. Okay? So far, so good?
Yeah, that sounds great to me.
Okay. Now, if there's an emergency, you actually are going to be able to access your money. But we're going to urge you to never do that because it will lower your pension.
Right.
It could
Because if
even
you take money out of it, then you have less to be working with.
less to be working with,
Right.
and sometimes you could even ruin the whole strategy. So, but the good news is you have a program that can pay you for the rest of your life.
Okay.
You can't lose any principal.
Okay, so any money you put into it, you can't lose.
Yeah, that's another feature of the program. So if you're worried about running out of money and you're worried about losing your money, this is that solution.
Okay.
And again, think about what we said before. 70% of people are worried about running out of money.
Yes.
Socials, the pensions are 4%. They used to be 60%.
Right.
So what product is that? We're going to tell you when we come back.
Leave you hanging,
Give us
right?
a call at 855-348-6015. We will, if you are worried about these things, worried about running out of money, we have an IFW retirement roadmap that's complimentary. You will be able to see with your very own eyes, based on math and science, if you're going to be okay.
Eric, thank you so much. To our viewers at home, don't worry, we're not going to leave you hanging. Eric's going to share with you how you can set up your own personal pension after this short commercial break. But we encourage you, pick up the phone, call the number on the bottom of your screen, 855-348-6015. Now, when you call that number, don't worry, you're not going to interrupt the show, but you will be able to speak to someone to get set up to come in and have your complimentary IFW retirement roadmap experience with Eric and the team of financial professionals at the Institute of Financial Wellness. You're also welcome to get connected by scanning that QR code. Simply take out your smartphone. You can scan that code in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few simple questions, and a member of the team will reach out to you and connect with you to be able to set up your complimentary IFW retirement roadmap experience that way as well. When we come back, Eric's going to share with you how you can set up your own personal pension, so stay with us.
Good morning, Ben.
Good morning, Ben. Hey, birthday party for Carolyn 5. Happy birthday to you.
morning, Ben. Happy Monday.
Daryl's birthday, be there every square. Happy birthday to you. As you can see from our quarterly report on slide number 62, we're trending in the right direction. All signs point to a very positive outlook for the next several years. If you peel back the onion
Ben, do you have anything to add?
The work never seems to end until the day it finally does. Call today and get your very own complimentary custom IFW retirement roadmap experience so you can live your very best life in retirement. Let's get there.
Welcome back, South Florida. You're watching Wealth Unlimited Get There. I'm your host, Kristen Oakley, and I'm here with Eric Sussman. He is the founder and CEO of the Institute of Financial Wellness. The reality is that the number one fear that most Americans have is running out of money, and that's what we are addressing today. We're talking all about longevity risk and how we can help prepare folks so that they don't run into that risk of outliving their money. So we mentioned before the commercial break that you had some solutions of that what you can enact for folks. We talked about setting up a personal pension, and you left everyone hanging. So I'm going to let you take it from here and talk about some of these solutions.
Absolutely, and really there's several ways that this can happen where you have a combination between certain products and other products. But the one that I'm going to focus on right now is the word, and I described it before, what this thing does.
Yeah, so let's represent that. So
Yes.
what does this thing do?
What it does is, in essence, you exchange a sum of money for a guaranteed income for the rest of your life.
Right.
And by the way, it can be for your life and your spouse's life.
So if something happens to one of you, then the other one is going to be okay. That's
right.
key. Okay.
That's right.
All right.
And the other thing is, a lot of people are worried because these programs in the old days, if you passed away and your spouse passed away, the money would not
Be there for you.
It wouldn't be there for your beneficiaries.
Right, right.
Or you. This particular new hybrid program gives you access in case of an emergency to a sum of money. So anyway, let's let the cat out of the bag. The name of this product is a lifetime income annuity.
And that is how you set up your own personal pension.
Yeah, and there's a lot of, if you Google it, you'll see good things, you'll see bad things, but I am here to assure you that PhDs, economists, math, science, studies, it is the best way, the most efficient way that you can create income for yourself. And I know there's some of you out there that are watching this and you're saying, oh, annuities, those are terrible, I heard. Well, I'm going to challenge you and say, what did you hear about them? What was your experience with them? Personally, my mom, because of me and 28 years of experience, has a personal pension plan. She has the exact product that I'm speaking of. And my mom lives a great life.
Yes, tell us more about Mama Sussman and how she's living her best life.
Yeah, I have to say, I mean, she gets thousands of dollars. I'm not going to say it. I was thinking about saying it, but plenty of money every single month for the rest of her life.
From that personal pension.
From that personal pension. And she's traveling, she works part-time because she wants to, not because she has to. She spends time with her grandchildren, and she doesn't worry. There are studies upon studies out there that say that people with pension plans live longer with less stress. And you think about it. If you know you're going to get a check every single month and it's never going to stop,
right,
certainly takes the edge off.
It does. Well, it helps you sleep well at night. You sleep better, and that has a direct impact on your health and wealth, obviously.
Yeah. So, for those companies out there that, they say negative things about that particular, I don't understand it. I challenged them, come on our show, have a discussion with me. I can't imagine why that would be a bad thing to have.
Right.
Well,
it's kind of like, it only takes one bad apple to spoil I'm blanking on the right, a bunch, right? the whole barrel, if you will. And there's certain annuities out there that give all annuities a bad rap, but you're talking about a very specific kind. And so I'd love for you to kind of hit on too. We've talked about what it can do, but what makes it so different from some of the other annuity products out there?
Flexibility. So because the baby boomers, the 76 million people that are headed into retirement, because that need and all the pensions disappearing, the financial services industry came up with a great solution. They built the product to satisfy the need. They did studies. They found out people are worried about running out of money. They're worried about losing their money. So they built, and because of technology, because things get better and better over time, just like Uber came out and replaced, taxi cabs and things like that, things get better, computers get better. Well, these products have gotten better. In the old world, people would sell them maybe sometimes when it wasn't the most appropriate thing.
The most suitable.
The most suitable. So for example, let's say let's say you had a husband and a wife, and let's just make believe that it was sold improperly, and that the wife was given a pension for the rest of her life. But if she died, her husband didn't get anything.
Right.
That would be an inappropriate use of that capital.
Yes.
Because you're putting the husband at risk. Vice versa. What happens if you have a person that doesn't have a really long life expectancy, and they're only going to live 7 or 8 years, and you buy an annuity that doesn't have a beneficiary attached to it?
Right.
Could be a problem.
Because then all the money's
children
gone
might
when
get
that
upset.
person passes away, right? It's
Right.
not left to anyone.
Yeah. So it's like anything else. Certain types of doctors and lawyers put a bad name out there for other doctors and lawyers.
Right.
And there's certain people that distribute these programs that in the past, I think it's changed a lot. They did some things that I think were not as suitable as it could be. But
Right.
I want to emphasize to everybody out there, there are so many compliance measures and safety measures for you. Insurance companies, they must have, I don't know if you know this, Kristen, you probably do because you're a financial educator.
But I learn things all the time. That's the beauty of this profession.
Right. But, if a bank lends out, if a bank receives $1, it can lend out $9 against that $1 that it
Right.
has. All right. So people are so excited about the safety of banks. But the reality is a dollar lets them leverage 9. If an insurance company has a promise to pay $1, do you know how much they need to have in reserves?
How much?
$1. Okay?
1-to-1,
so
yeah.
it's 1-to-1 instead of 10-to-1. So, the reality is so many people just aren't aware of the safety measures that are put on these products and this industry of the insurance industry. So the things that happen with Silicon Bank and all these kinds of things, very rarely, it has happened where insurance companies mismanage things. Over 100 and something years, I've heard of a couple. But they have insurance for that, and they also have other companies that purchase. Remember, AIG in 2008 had some problems, and
Right.
there was some safety measures in there. So anyway, the point I'm making is that these products can be very, very useful, very, very helpful.
Well, let me put you on the spot here with this question, because I know that a lot of things that I hear folks being upset about when they think of the term annuity is the fees. And so again, just like other things have changed, let's talk about that. What are we looking at in terms of fees with these newer products?
Bottom line, 1%. Okay, that's the bottom line. To add that feature, it's usually 1%, and that's it. Total expense.
Wow. Yeah, because I think that was what gave a lot of annuities a bad rap,
Yeah,
right? Was
some
all
of them
these
had
hidden
4 or
fees,
5% fees.
5%, and then it's like your money's really not going to work for you in that case.
Yeah. So, if you're out there, give us a call, 855-348-6015. We'll do an IFW retirement roadmap. We'll connect you with an IFW certified financial professional. We'll do an analysis. Maybe you should have some lifetime income annuities. Maybe you shouldn't. Maybe you should have professionally managed portfolio. Every situation is a little bit different. We want to make sure we tailor a plan for you. So give us a call, 855-348-6015.
Eric, thank you so much. To our viewers at home, we are going to take a quick commercial break, but that number to call is on the bottom of your screen, 855-348-6015. Again, this is completely complimentary. For no cost, no charge, no obligation, you can come in and get your complimentary IFW Retirement Roadmap experience. When we come back, we're going to dive into some of the other risks that today's modern retiree faces. We've been focusing on longevity risk. Do you know what the other major ones are and how you can navigate them? Stay with us. More after this.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling your love for an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter, the one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today and get your very own complimentary custom IFW retirement roadmap experience so you can live your very best life in retirement. Let's get there.
Welcome back to Wealth Unlimited Get There. I'm Kristen Oakley here with Eric Sussman, founder and CEO of the Institute of Financial Wellness. We've been talking today all about the risks that today's modern retiree faces. This is not your parents' or your grandparents' retirement anymore. The landscape has changed, and we spent a lot of the show talking about longevity risk. Obviously, we are living longer than we ever have before. What are some of the other risks that today's modern retiree needs to be prepared to face?
Absolutely. Well, one of the biggest risks that you face, believe it or not, is healthcare, right? Healthcare, there's something called long-term care, and what that means is you can't do 2 out of 6 activities of daily living, which basically means that you get really old and you need somebody to help take care of you.
Bathing, dressing, being able to move, that kind of stuff.
Yes, exactly. And the bottom line is 2 out of 3 people are going to experience that. There's a 67, it's actually a little higher, but let's just call it a 67% chance that you will experience needing that type of support because people are living longer, right, and all that.
Yep.
What are the chances of your house burning? 3%? What are the chances of an auto accident totaling your car? I don't know, 18%. I'm not a property and casualty insurance person, but I'm kind of familiar with the statistics. Well, if there's a 67% chance of having a healthcare catastrophe that bleeds you of all of your money and could put you in a terrible situation, don't we want to protect against that? So that is a big risk that a lot of people are overlooking. Matter of fact, tell another family story. My grandmother, she's not with us anymore, but she spent, I think, 7 or 8 years in a facility, and we had insurance for her. So she lived 8 years in a facility. She had memory problems and all that. And thank goodness, $60,000 to $70,000 a year paid for in full by an insurance company because she was living that, she was one of those 70%, 67%. So of course my mother, in addition to the great annuity
personal
that she
pension,
has,
yes.
personal pension, she also has protection in place for that. So you have to measure those risks and really be prepared for them.
Right. Well, and obviously healthcare costs are localized to some extent, especially with long-term care. So I'd love for you to share, what are the current stats that people in South Florida need to be prepared to pay? I
mean, it is a lot more than it is everywhere else. I think, and don't quote me on this, Kristen, but I think it's like $80,000 a year for an assisted living facility.
And that's not even a private room.
That's not even a private room. So it's exorbitant, and it could really put a drain on families. And a lot of people say, oh, I'll take care of my mom. Believe me, it's very difficult. You're going to give up your entire life. So thankfully, we really had a good experience with my grandmother. And she lived a great life. And she was in an assisted living. She had friends and all that.
Right. Well, and not to go too far down that rabbit hole, but things have changed. Long-term care insurance, a lot of those companies are out of business now because they weren't prepared. Because there was such a need. Right. There was such a need. They weren't prepared for people to continue living as long as they were. So what is your recommendation on how someone can even self-fund their long-term care? Should they need it? Because Medicare doesn't cover a lot of those costs.
There's a hybrid product tied in with life insurance that is much more cost efficient. So as a result of the long-term care being so expensive, it's ridiculously expensive now, and it's out the window. So if you don't use it, you lose it.
Right.
So a lot of people are moving to a hybrid product that incorporates life insurance, equity cash value, and long-term care in one. And that's something that we've helped a lot of people with.
Absolutely. Well, I know we only have a few minutes left in today's show, but what are some of the other risks that modern retirees need to be prepared for?
The big one, and we've mentioned it a little bit before, is sequence of returns risk. That's that risk that you retire in 2008. If you retired in 2008, like my friend's parents did, you could be really susceptible to having to liquidate assets that are down in value when you don't want to have to sell them.
And we never know when the next 2008 is going to happen.
Or the next 2022, for that matter.
That too,
right? I always talk about that. The other one that's really, really present right now, the I word, inflation. Inflation is like, before I became a certified financial planner, well, before I got into the industry when I was like 28 years ago, I really didn't understand what inflation meant. I felt like if I had money in my underneath my mattress, it was safe. It's not safe.
No.
Because if I go to my mattress and I put $10,000 underneath my mattress, and then 20 years later I go get that same $10,000, technically it was safe, but it's going to lose what we call purchasing power.
You know what I call that?
What?
Going broke safely. Right?
That's right.
I mean, that's a sad reality because to your point, that money is not worth the same amount anymore.
Yeah. So, and lately we 7-8% inflation rates. It's not going to keep up that way, but it's been very challenging. So, for example, let's say you're retired and you have a fixed income of, I'm just making this up, $30,000 a year.
Right.
And inflation's going as it is, going up and up and up. Well, if you keep having $30,000 a year coming in, you're not going to be able to keep pace with inflation.
Yep.
So it could be a never-ending problem. You can have to draw more money out of your principal, and it could potentially deplete itself. And that's that fear that people have of running out of money. So inflation's a big deal.
Well, especially because the cost of living is now doubling so much faster than it ever has before. I mean, all you have to do is go to the grocery store and it's staring you right in the face.
Yeah, and by the way, to my fellow South Floridians, we've had a good problem. Everybody loves South Florida now. People keep moving, so the property prices, everything's going up so much.
Yeah, I can see why. We love South Florida, right? But that is a challenge. Any other risks that you feel like are top of mind as people think about coming in and really getting their own IFW retirement roadmap experience? What other risks need to be accounted for?
Market risk. The risk that, we want to grow our money, right? We want to grow our money. We have to grow our money to keep pace with inflation, but it's at risk if we're in the market and we're in a down spiral and we need money and we don't have that volatility buffer that we mentioned before, that could be problematic as well. So, we have lifetime income annuities, reverse mortgages, life settlements, cash value life insurance, and professionally managed money. Those are all different ways, and it's all custom. It has to be customized.
It does, yeah. Yeah, for sure. Well, if someone's watching today and they want that customized approach and making sure they're on track to navigate these risks, what do they need to do?
You need to call 855-348-6015. We'll do a great job for you. Don't be concerned. We're not going to ask you for any sensitive information. No social security numbers, no account numbers. Just enough to produce an IFW written plan, which is a financial roadmap. We'll get you squared away and help you get there.
Wonderful. Eric, thank you so much. To our viewers at home, thank you so much for watching. We appreciate you sharing this time with us. We encourage you to take advantage of this opportunity, and we look forward to being back with you next week.